I want to take you here. Why? Um, I got out about a month and a half ago, maybe even 2 months ago. I got out. I left a few positions that I didn't even watch. I just left alone. I just ended up selling MITT today due to poor performance. Um, but I had two new stocks that I added to my watch list, and this was the second one. MITT was the first new one. This is the second new one. And I want you to, for those of you that are sort of kind of understanding the game right now, understanding the game, period, I want you to focus on some key words. And I'm going to say key word before I say the word. We're looking at First Trust. First Trust Preferred Securities and Income ETF FPE. Investment Objective Strategy. The First Trust Preferred Securities and Income ETF is actively managed exchange traded fund. Most of us know what that is. Investment objective is to seek total return and to provide current income under normal market conditions. The fund invests at least 80%, let me get over here, 80% of its net assets, including investment, keyword, borrowings, in preferred securities and income producing debt securities, including corporate bonds. Hold on. All from borrowing all the way to the end of the paragraph. Keywords, key phrase. Borrowings in preferred securities and income producing debt securities, including corporate keywords, bonds, high yield securities, and convertible securities. I don't need to go any further. Show don't. Here's the stock right now. It's for 1920. Now, we remember our premise. Plenty of meat on the bone, long in the tooth. What do we mean by this? Plenty of meat on the bone, long in the tooth. Plenty of meat on the bone is its 52-week range, which are the numbers below it. 1040 to 2050. So that means it's long in the tooth. You can double your money. It's pretty long. I've seen longer. But if we go up to 1920 to the top, there's not a lot of meat left in the bone, on the bone. Sure isn't. I mean, you're talking, almost $1.40. You'd have to buy 1,000 stocks to get $1,000 if it hit its 52-week range. And this is why I don't rush in my trading out, freak out. Let's go back to what's going on in the market. As you see, it is going sideways. This is the reason why I got out. The Dow Jones is at 27. NASDAQ's at 11. It's been around about that area for about a month and a half. That's sideways. A little bit of upward momentum. Okay. What is driving all this hustle right now? What is driving the hustle? It sure isn't grocery stores and supermarkets, which Push got delisted. Happy I didn't put money in that. Well, is it the real estate market? Nah, real estate market is a derivative from a driving force. And this is a derivative from that driving force. So we're way down the road dealing with mortgage ETFs, meaning the bottom 1, 2, 3, 4, 5. The top one is the funding for real estate, NLY. As you see, it is on the up and up today. It's kind of volatile, nothing serious. Don't want to touch that. Let's jump all the way to the bond market. Everything is high yield. If you go back to my prior videos, I explain if the New York Stock Exchange is under 20,000, 20,000, 21, not above 20, not below 22, the game is subprime bond market. If it's above 22, it's high yield bond market. I'm going to prove my point to you. S triple Q. Look at it. That's NASDAQ short. It's triple Q. NASDAQ long. Totally opposite from one another. The bond market, or the subprime bond market, is directly connected to the NASDAQ. The high yield bond market is connected to the New York Stock Exchange. Okay. The dollar is at 93. Weak dollar. Stock market positive. As you see, energy is kind of fluctuating. Sides of this ETF, mind you, ETFs take time to reflect the actual market conditions. So whatever is up in the fuel sector, as the dollar rises, the fuel sector will drop. At this point, you got UDN, weak dollar. Yep. And you have UUP, strong dollar, both on the up and up. That's an indicator that the market is going sideways. This is exactly why I decided to take a vacation when I did. This is medical companies. I'm not even going there right now. You got rare earth minerals, sort of kind of on up and up, which is just consequential, just circumstantial. Cashless society, doing well as it should be. All those are that's just haters or somebody. Okay. These are all nice dividend holders. Yeah. The market's going up, though. That's going to be doing okay. Oil storage, you should see. Manhattan, this is the telltale sign. Manhattan oil is down. Manhattan oil is an indicator of what's going to happen in the short term energy sector. Let's keep on hustling. Sci-Fi banks blown up. So if you go back to the previous videos, what are we talking about when sci-fi banks are blowing up? Liquidity is moving. This is sci-fi banks, too big to fail. HDB, money coming in from China. UBS, that's Credit Suisse, coming in from Euro. ING, coming in from U.S. allies worldwide. Shipping, I already looked at it, down. That's just funds, sort of down. Tech, mixed for tech. But the NASDAQ is high. Hey, how's this happening? Dollar Tree, where is my... Dollar Tree is actually fucking raging. Yeah, I made a lot of money off Dollar Tree this year. Still very high. Fixed income securities, up. Sovereign wealth, these are the ones that should be doing what they're doing. Air lease, doing well. Water resources, fine. And what we're talking about here is Spotify, internet content, electric cars. That's electric cars in China. Let's go back to these markets real quick. My point here before I lose a buying opportunity, because I'm getting ready to buy preferred trust. That's where I'm going. Why? Because it's not a lot of meat on the bone. My prediction is this is going to beat its new 52-week high. Why am I saying that? Because once again, the economy is on a free fall. And if it is being propped up by the Federal Reserve. Financials are blown up. It's just a no-brainer, ladies and gentlemen. I'm going in FPE. I'm going to go ahead and make the buy. I may touch down with a follow-up video at the end of the day. I'll probably do a little bit of light trading here or there till the end of the year, unless I see some trends that are indicating that the market will stop going sideways. But right now, I'm just doing this for the sake of the video, and we'll talk more later. Thank you for tuning in.